XRP could solve banks' biggest problems, but why aren't they adopting it yet? Well, that's everybody's question. I mean, it's faster, it's cheaper, and it's a lot more reliable than Swift. Yet, key factors are holding massive adoption back for XRP. By the end of this video, you'll understand the reasons banks haven't adopted XRP just yet and why this actually could be one of the biggest opportunities you've ever had as a retail investor. All right, so let's break it down. What exactly is happening with institutional adoption for XRP? Because there's a lot of confusion out there in the market right now. Why aren't institutions adopting it? And why don't they care about the price that they'll actually be buying XRP at? Well, they're perfectly happy to be buying XRP at $100, $1,000, or even $10,000 because they know that it's going to be going higher. Very similar to Bitcoin. They were all late. Institutions didn't start buying and aggregating Bitcoin until it was $30,000, $40,000, $50,000. I mean, you got MicroStrategy at $72,000 per Bitcoin is their average buy. So they don't care about getting the best price, okay? It's about timing and coordination for a global financial infrastructure. And the current price just proves that we're starting to get some of that institutional involvement. XRP's price predictions aren't driven by retail, okay? You've seen me come out on this channel and talk lots of times about very high prices for XRP. None of that's going to happen with retail. It needs to be institutional. We need catalysts. We need real world adoption and a crisis, I think a liquidity crisis, for them to actually pull this into vogue and start using it the way that it's intended. But until then, retail investors, we just don't have the capital, nor do they have the coordination to maintain the level of volume that would be needed for high prices for XRP. You might see, some news come out about the Ripple case, and we saw a spike and then it falls back down. Or you might see, something come out about a partnership and it spikes and it comes back down. And I know people are frustrated by that, but that's what it is. It's speculative right now. This is where we're starting to see institutions come in, right? And so I know, again, we haven't seen huge price moves here, but that's because institutions are buying in for these ETFs right now, and they're using TWAP and VWAP strategies to do it. So if you don't know what TWAP and VWAP are, it's time-weighted volume average pricing, and then same thing for the other volume-weighted average pricing. So basically, you say, hey, I've got $100 million, I want to buy XRP, but I don't want to have to pay crazy high prices if I spike the price and there's slippage and the order book doesn't have enough to cover. I'll just average into the market over a month, 2 months, 6 months. And you work with these teams that have these algorithmic trading strategies, and they average you into the market at the best prices over that period of time. And so you get in at an average price of, call it $3 over the last 4 months here. And these strategies allow them to accumulate large positions without causing those big price spikes. I don't know if you've ever, most retail investors, and I'm not poo-pooing anybody, you probably haven't had $1 million or $1 billion to average into the market with. If you just dumped that through an exchange and not an OTC desk or a dark pool onto the market, you would see huge slippage. The order book would skyrocket. You'd see the price jump and then it will fall back down, right? And again, occasionally there is a retail investor that will do this, but all the institutions are using much more sophisticated mechanisms to enter the market. So without the regulatory clarity that we recently gotten around XRP, we know the Ripple case is ending. We've got July 13th of 2023, the judge Torres made the mandate or stated that XRP in and of itself is not a security. We have that clarity here in the US. And now that the SEC with the new administration and Paul have come in, we're seeing the transition from apprehension to using these assets to, okay, maybe this stuff will actually work. So financial institutions operating all over the world, they have to operate with regulatory compliance and tax considerations involved when they're making these decisions. And until, again, just here recently, there's unclear regulations around XRP and its status in the US, which created a lot of hesitation. I mean, you haven't even seen BlackRock come out with their ETF for XRP yet. And I think that's because the case is still lingering. We don't have the final sign-off from the judge in the appellate court. So what it comes down to is you can't build $1 trillion payment infrastructure on uncertain legal foundations or tax foundations. You have to absolutely know how the government's going to be treating this. And major players need defined regulatory approval before they're going to be committing the amount of resources to this like we would want them to. But we are seeing some of that adoption, right? We have seen some price action on XRP here, and we're seeing concrete institutional interest in accelerating the adoption of this asset. It's a lot of it's behind the scenes though. You got major banks worldwide are now exploring digital asset integrations with some partnerships. You just had, the BVVA announcement with Ripple, which we've known about for a long time, in and out. It's been in and out of the news. And this is just more of a, formal launch of that. You got, Bank of America that came out and mentioned it, and many others that have been working with Ripple and their team for a long time to integrate their technology. Tons, almost 300 partnerships globally for Ripple. You've also got these ETFs waiting in the wings to be approved. Many of the futures ETFs have already gotten through. We just got the listing the other day from the DTCC on the XRP ETF for Canary Capital. That's normally the step right before the S1s would be approved. So, here at the end of 2025, I do think we're going to see ETFs approved for XRP. And all of these developments signal that the industry and its titans are making strategic investments in the infrastructure right now, as we speak, to be able to use this on a go-forward basis. So what about retail? Your holdings are very small in comparison to what these institutions need, okay? And I don't say that to belittle anybody. If you're here and you're listening to this and you're invested in XRP or some of these other digital assets, you're way ahead of the curve. The opportunity here is gigantic in comparison to almost any other wealth transfer event that's happened in my lifetime, or probably the last 100 years, maybe even longer. So when you're talking about retail and you're considering retail investors, they might hold, 2 billion, 3 billion XRP of the available supply. The whole available supply for XRP is around, 52 billion. The total supply minted is going to be, 100 billion XRP. And obviously it's less than that because, some of it's been burnt at this point because of the transactions on the network. But when it really comes down to it, the available supply that retail is currently allocated to, somewhere between 2 and 3 billion total. So why would retail even compete with these large institutions? Well, you wouldn't. They would just acquire it later on through private markets or private sales as the asset appreciates, similar to Bitcoin. Like the people that held Bitcoin early on, they've made a lot of money and they've divested that over a period of time, or they've held on to it and they borrow against it because they have a very low basis. But at some point, they're likely going to exit that position. And that's where institutions come in, and they will pay a premium for that. The math simply doesn't support the idea that institutions are worried about retail competition. There's way more XRP available for them than there is for us. And the amount that we have, it's maybe 2 to 3% of the total supply. So I know people are like, well, they wouldn't let that many people get rich. Yeah, they would, because most people, unfortunately, are going to be like lottery winners. And within 3 to 5 years, they're going to spend it all anyway. And then it's going to end up back in the hands of the institutions. So, and again, I don't say that to be mean. That's just the reality of the situation in the world that we live in. So there's really enough supply for everybody here, including the private channels and strategic partnerships, to make a lot of money together. And again, institutions aren't going to care if retail makes a bunch of money in this transition that's going to happen. So alongside all of the other fantastic things that are happening, like I mentioned, you have, 300 partnerships with financial institutions globally for RippleNet. You got central bank partnerships that are accelerating with them, with Palau and Bhutan and Montenegro and Georgia and Colombia, all of them working on CBDC projects and issuing those on the XRPL. Maybe Japan and SBI issuing their CBDC with Japan and stablecoins in yen on the XRPL. You got Brad Garlinghouse, who's stated that 10 different government partnerships are currently active working with them. And something that most people don't know is R3 also is working on stablecoins globally. In the Middle East, there's strong connections there between Ripple and a few other people, large banks. Sandbank, if you haven't checked that out, I would go check that out. You also had, large money transmitters like MoneyGram that had trialed XRP years ago for cross-border payments, right? So people are going to say, look, like it's been this long, why would they adopt it now? Well, it takes a long time for institutions to get comfortable with something and trial it, make sure, especially when it's the whole backbone of how the world works. They're not just going to do that on a whim. Okay. They have to be very thorough in that. And so, it's going to take a long time for them to actually trial and test this. And all of these partnerships have come out over the years, but right now they are seeming to be accelerating. You've got American Bankers Association that's listed Ripple as a partner for monetizing financial infrastructure. You got the Hidden Road acquisition from Ripple that was a prime broker. And now you've got Ripple also, applying to be an OCC regulated federally chartered bank here in the US. And the pipeline of future partnerships continues to grow as regulatory clarity improves here. We may have the Clarity Act here at the end of 25 as well. Cynthia Loomis, has stated that she feels that that's a strong possibility in the near future. So with all of that lining up, the infrastructure and the evolution seems to be forming predictable patterns. The legacy system rails and their transition over to blockchain infrastructure is going to mirror previous transitions. Okay. Just as credit card companies evolved from manually printing machines. I don't know if you ever saw your mom go to Lowe's or one of those early large stores here in the US when I was young. They do the credit card and they would print it, and then be able to send a receipt and do everything with the company. It's wild to see that transition, go from being such a manual process over to a completely digitized process where you just tap your card now. And it'll be very similar in this deal. There's a lot of manual back end stuff where they've got to reconcile all this data, and then they're able to allow a payment to settle within 2 or 3 days. Moving from that to ISO standards, where everybody operates with the same data set that they get, and then they can standardize that all the way across the world. This year in 2025 in November, that should be fully implemented. And that's kind of that's what's needed in order to be able to move to instant settlement. So the question isn't whether this transition is going to happen, but when institutions will actually make it happen and which institutions will lead the way with the assets that we know are going to be used. If unless you've had your head in the sand, there's a lot of literature out there about which one of these assets is going to be the main one. And then in addition to that, there's a couple other networks like HBAR, XLM, XDC, and a few others that leverage that messaging standard through partnerships that they have. No blockchain is necessarily ISO 20022 compliant, but they can provide the instant settlement component of those transactions. So again, history shows that early adopters of new infrastructure gain significant competitive advantages. So if you're here early and you see the opportunity and you get in, well, you're probably going to reap the benefits of that. And many of these companies that are building these solutions and the private equity that's in those companies probably going to do pretty well as also, right? But as a retail investor, most of the time you need to be accredited to get access to those type of opportunities, whereas digital assets, literally anyone can go onto an exchange. As long as you can pass KYC, you can buy some. As that kind of leads me to my next point. This is the first time that I've really ever seen that the little guy gets a chance here. Retail can own the infrastructure and the back end and the benefit over the long term. They can get an allocation to this stuff before the institutions really make a play and corner the market and then make financial products. And that's the only way you get access, right? And I think that may be the way this ends up working out. But right now, what makes the moment unique is that retail investors can participate in this infrastructure transition before it's actually deployed. And people may say, well, why would that be? Well, you need some liquidity in these networks to be able to trial them on the mainnet before there's institutional adoption. And retail is the perfect playground for this to happen. Retail is going to speculate. They're going to bring some liquidity in. They're able to then trial these networks previous to the technological shifts that primarily benefit the companies building the applications, not the actual individual investors or the retail people providing this liquidity. And I know people get mad about that. They're like, Ripple's dumping on you. Well, look, they're also giving you the opportunity to invest before all these large banks start using this stuff. Blockchain assets represent ownership stakes in a fundamental infrastructure, right? It's a bearer asset. You own part of the protocol. That's never been possible before. This is unprecedented in history in the technological transitions that have happened in the past. Most of this has been in private walled gardens, and you had to know somebody to get into the room to be able to participate. That's how private equity works. You got to be in proximity. You have to be there early with some capital to be able to participate. And the other piece of this is you don't have to have a ton of money to be able to get into this. You can literally buy fractions of any of these assets because of the decimal places that they go down to. And they need that to be able to function at scale the way that they're meant to. So again, just an unprecedented time for retail to get exposure to something and early access and upside before the institutions really take hold of this asset class. And it's cool because I finally see all the pieces falling into place. The institutional adoption timeline suggests that we're in the final preparation phase before full board adoption. Regulatory clarity is emerging, technical infrastructure is proven, and the strategic partnerships are in place. Like the writing is on the wall. And the remaining variable is coordinated activation across multiple institutions simultaneously. And I've been talking about this for a while. You need a systemic shock or a supply shock on XRP to be able to drive the price to the levels they need it to be in order to use it. And when this happens, the impact is going to be immediate and significant, in my personal opinion. And you can call it flipping the switch or whatever you want, but it's going to be a big green candle when this thing finally sees the demand that I know is being held back. And again, I think it's coordinated to actually push the price to where it needs to be. So smart retail investors understand this opportunity. For retail, this represents both opportunity and eventually some responsibility. Understanding institutional timelines and motivation helps inform better strategic decisions. But if you're not going to take advantage of it and you're not going to be a good steward over the long term, what's the point? Institutions aren't here to compete with you. They're validating your entry positions. And again, I think they're going to be willing to buy it from you at significantly higher prices. They're creating the demand that will drive the long-term value and appreciation of this. And if you're invested in some of these other utility-driven assets, that's what we want. I know, the premise behind crypto for a long time has been decentralized, against the man, down with the banks, sovereignty, freedom, separation of this. But I personally would rather just stack my pennies next to the institution's dollars and ride their coattails. And again, everybody has different principles and core values and beliefs about the world. And I'm not here to debate any of those things, but I do want people that see the writing on the wall to be able to take advantage of it. And this is probably a good time for my disclaimer. None of this is financial advice. It's only for entertainment and educational purposes. If you need a financial advisor, okay, and you want somebody to actually give you financial advice, you can work with Digital Ascension Group and Digital Wealth Partners. Digital Wealth Partners is an SEC registered RIA. We have licensed and credentialed financial advisors there that will advise you on your crypto. So you can just go to digitalwealthpartners.net. You can get actual advice from somebody that can provide it for you. That's not just some guy on the internet like me. So, but, again, I can only tell you what I'm personally doing. All my eggs are in this basket. And you can listen to Warren Buffett. You can listen to JP Morgan. JP Morgan said, put all of your eggs in one basket and watch it very closely. And Warren Buffett said, diversification is a hedge against ignorance. So if you know the outcome of something, if you have a strategic advantage, if you have an edge in a market, that's how people build fortunes. Literally, they find a blue ocean, they find an opportunity that is a huge demand in the market, and they create a solution for that, and they double down on it. They pour all their money back into that investment or that company, and that's how people generate the trunk or the core of their wealth that grows into the tree that they planted, that bears fruit for their family for a lifetime and multiple generations. And I just don't want people to miss the opportunity to at least look at this stuff and understand it before the opportunity's gone. So what is the opportunity? Well, you're investing in infrastructure. Retail investors who understand this dynamic and position themselves accordingly, they're not gambling on price speculation. Bitcoin, it could go up, it could go down, it's 30, 40%, either direction, volatility. It's not sound money. But if you understand the value proposition for these protocols that are going to be used at scale for global infrastructure to settle payments, you're just putting yourself, right in front of that before it happens. It's probably, in my mind, we work with a lot of people and de-risk and help them mitigate risk and set things up in a way to be able to be diversified, on the financial advising side. But if there's a sure thing, it's the only thing that I know for sure. And again, that's why I'm positioned where I am. I don't own anything else besides XRP. It's not a gamble. It's not speculation, in my personal opinion. And again, you can do you. But at the end of the day, I think a lot of people are going to become very wealthy if they understand what's going on. They're making infrastructure bets on the future of global finance right now. Retail that's invested in XRP, that's what you're doing. The institutions know this, which is why they're not concerned about retail front running though, okay? Again, picking it up at 50 cents, 20 cents, $3, $2, whatever you bought it at, the institutions are going to be willing to pay a much higher price because they're going to need it. And they have the money to do it. Right? They don't care about a few people getting wealthy. There's enough value creation in this transition for everyone who understands it and what's actually happening. So in closing, the institutional adoption represents one of the largest infrastructure transitions in financial history. Understanding these dynamics requires staying informed about regulatory developments, institutional partnerships, and technical implementations. So if you want in-depth analysis, information on how you can secure your crypto, and much more analysis on crypto markets and developments alongside traditional integrations, We've been running the Beyond Broke Mastermind for over 2 years and have 7,000 members. And you'll have direct contact with us on weekly lives, links, pinned comments, and there's a discount code for this month in the comments below. So if that sounds good to you, we'd love to see you there. Until next time, stay curious and stay ahead of the curve. Until next time, please like, subscribe, and we'll see you on the next one.